Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. It is, where are we here? It's Thursday, April 16th. Woohoo, party! At TRI, Thursdays is baby powder report day. So we had a nice session with Julian. And actually, today was a really cool session because he was right in the middle of a trade, and Julian's doing a lot of trading these days. So, congratulations to him. Seems to be heading in a good direction, and through his report, he actually had alerts going off. And okay, guys, I actually have to do something here. So it was really interesting to see him talk through his report while he's got a trade going that he had to pay attention to. So, if anything, excellent analogy of a trader's life today at TRI. A lot of sort of mixed messages out of the market. I like to follow the risk on, risk off, and you can see everybody's just sort of calming down. Except two markets. Bonds continue to work their way higher, and it's kind of funny, our little joke about that bond trade the other day. And Bitcoin seemed to have caught a bit of a bid here. We will see how long lasting this is, but at least it was encouraging to see she got off her knees there, just as we were approaching a really interesting apex point there. So for the purposes for you guys, I usually just try and keep the conversation to just a relatively limited scope here. US dollar index, as you can see, the coil is tightening and tightening and tightening. I did see some weakness out of European currencies, Canadian, Aussie, those kind of things, commodity-based currencies getting whacked. Really the question for commodities is, now it seems to me, I think it's less a conversation in the short term about supply, and really it's just a question of how much demand destruction have we done here by bringing all these world economies to a grinding halt. We've always said, and actually, I spent a lot of time in the Daily Brief today talking to the audience about this video that I retweeted. Somebody on the site had shared it with me. I really think it's in your best interest to listen to Mr. Dalio. He actually explains a lot of sort of my thinking about why I'm so bond market bearish. He actually articulates the message really well. So maybe pop on the Twitter feed and grab this video. But also, too, we talk a little bit about what's the government's role in sort of stopping slides in the market, and how do they operate, and what are sort of the key takeaways. And the long and short of it here is governments have stepped in. They are spending a lot of money to try and shore up holes. So it really shouldn't surprise us that we've gotten as much of a dead cat bounce out of the stock market as we have. But there was something in particular I wanted to mention about that. It'll probably come back to me in a second. But he did make reference to something I did want. Oh, yeah. I've been very bond market bearish in interest rate, I guess bullish, but, looking for interest rates to go up. It's just, we're at this end of a 7-year cycle. What the heck does the pivot look like? Sometimes it can look absolutely nutso, insano, violent. My hunch is, baby boomers have done everything in their lives to great extremes. So I don't see any reason why we're not going to have some sort of absolute and insane extreme end to this interest rate cycle. But anyway, I'm just blabbing here. Anyway, point of the matter here is US dollar index has been moving up. Now I remember what I wanted to say to you. So I think it's really important that the world understand this, and Mr. Dalio made this very clear in his video, and I'm wasting time here, I'm sorry, but I think it's really, really important message. And I tweeted out years ago, and of course on Twitter you can never find things when you want to, but I tweeted out an image about the US dollar index and how it acted in the 1980 recession. And we have to understand that at the end of the day, the United States of America only cares about one thing. It only cares about the United States of America. And we live in a world, however, that is completely U.S. dollar denominated. I think Mr. Dalio said that 70-80% of all world commerce is done through the U.S. dollar. So that means, on balance, if the market craps out, the Americans are going to save the Americans' asses. They are going to bail out American companies. The United States of America's economy actually, over the past 10, 15 years, has gone from very vulnerable to what I would actually consider very strong and in a very strong position going forward. I am scared to death for countries that are not within the United States of America. And I've made reference to this before, that this recession is going to kill the global economy. But the United States, thinking about United States first, it ironically enough is actually probably going to come out of this in the best situation. So I thought, a lot of the sort of concepts that I teach and that I talk about, Mr. Dalio basically reiterates the same message. We are going through the reset for the millennials to take over the economy. We're at the end of a very, very long interest rate cycle. Really, the last place in the world you want to be putting your money into is like a 10, 20-year guarantee where you're paying them $1 today and you're going to get $1 back in 10, 20 years. Why? Because these governments are printing currency like there's no tomorrow. They've told everybody that they're printing currency like no tomorrow. And so as a result, we will see inflation come in, and bonds investments right now are a horrible idea. All right, anyway, I would highly encourage you to watch that video. It basically reiterates a lot of the same messages that I try to speak about day in, day out. The interesting thing about that, though, is that when we watch something like the US dollar index, it has absolutely nothing to do with the actual amount of dollars and the purchasing power of the US dollar. It has nothing to do with that. The US dollar index is nothing more than a basket of world currencies in representative as an index. So in essence, if you're buying this US dollar index, you are selling the rest of the world. That's what it really means. And then if you are selling US dollar index, it means you are buying all these other foreign currencies are going up in value relative to the index. So think of the US dollar index, especially in these crisis times, as, do I want to have my money working out there in the world, or do I want to make damn sure that I'm in the only thing that's safe and actually guaranteed in this world? Of course, the Eurozone people, the Japanese people, they would argue that, but, Japanese Eurozone interest rates, they're now negative and probably going to get worse. I saw a French bond auction today, and all of the yields were negative. It was like, wow, what a crazy world we live in. So, it is what it is, and as it stands right now, fear, panic, euphoria, we're still waiting for this range here on the US dollar to resolve itself. And that'll sort of tell us what sort of the tone is going forward. Bulls would like to see this break down. Bears would like to see this rally. Speaking of the risk on risk offers, we still have this bull AB equals CD just floating out ahead of us. And, there are inverted head and shoulders. I still like the idea of up. And then yesterday we talked about the railroad tracks. And if we actually drill down to like 4-hour charts on this S&P, it's starting to look very head and shoulders-y. And, of course, we've been talking lots recently about how, you can see how well defined that is. Really, pretty simply put now, you start seeing closes down here, then the U.S. market has confirmed that railroad tracks and we're crapping out. So, I don't know. I mean, who does, right? Nobody knows whether this thing's going to rally or crap out here. Still think, into tomorrow there's incentive for them to keep the market up, but, that's options expiry kind of talk, tinfoil hats, all that. I think just on balance for you guys, the simple message is, we've resolved 38.2s to the upside. We do have these bullish objectives working, and I don't see any reason why that won't be hit. And it's just a question of, is this actually going to break down and maybe do like 50% corrections of this range over the next sort of week or two? That's sort of what I would be thinking. If these lows can hold and you see the market start to ratchet up and take these highs back, then I think we got a pretty good shot heading up here. But you can see the railroad track stops. There's a bit of a resistance level coming in up top here. And we could very easily roll over here and have to spend the next week or two backfilling a bit here. Don't be shocked if you see that happen. Interestingly enough, I don't think it's necessarily stocks. Like, I think this is sort of like throw the baby out with the bathwater, and then when the earnings reports hit, then because prices have already been discounted, you won't see too big of a hit to companies because their stock price has already been knocked down. The problem here, though, is you might find your individual companies. Remember, I was playing that little bank stock and it crapped out when the market had to do nothing more, and that was through this, right? The whole broader market didn't crap out, but the individual stocks busted lows and stuff. So be prepared for that. If we do head and shoulders, roll over top, fail here, I think this is like 50% of the range, so it's actually logical. If we did fail here, it's not the best trade location for me, but nonetheless, lower time frame players, they're like, well, this was a 50% level, so if we do top out here, I'm going to be looking for that head and shoulders to play out. Our enthusiasm to take shots on the long side, and especially things like junior stocks, and we'll get to that in a bit. Obviously, if this thing rolls over, we got to cool our enthusiasm there. So, really, the most important market out of all of these for the risk takers, I think, is actually the oil market right now. We've talked lots about how there's some funny business going on with this May contract. The June contract's already sitting $26, $27. So is it just a case that somebody's got their nuts in the ringer and they're just going to drive this thing down? I don't know where they want to settle this thing out, but you can see, I'd put tweets out earlier saying that this is a hell of a war zone right here. And you can see the war going on. I mean, this war is not over yet. So you can see they dumped it in, nice FU move, a little bit of a bottom, railroad tracks, bust the railroad tracks, M top, pull back, eat tails, rally back up, reload shorts, new M tops, now back down against the bottom. This is a hell of a war. And really the irony of it all is for us like slowpoke investors, we probably actually want to wait for this to W out before we can even really say whether this thing has turned the corner yet. Do understand, guys, stepping in, taking shots on the long side against the lows. I can completely understand that, but for like Joe Sixpack, investor, be careful here. I don't see any reason to get overly bullish just yet. It's often not in our best interest to step in and have this fight with them because, the pros, they love to do these FU moves, which just break the noobs' hearts. I would prefer that we just sort of wait for the W to come in. Then if we're going to buy here, we can at least look back where those big boys actually did establish a floor, levels, all that kind of talk to help you frame risk. So jury's still out. And, if this does crap out and break down, then I think the stocks just get dragged down with them. Sort of risk on, risk off kind of thinking. So risk off, and it was interesting how yesterday we had kind of said, the bonds, they really jumped back up, and of course that long setup still working away, just doing its thing. And was that a leading indicator? Maybe suggesting that the bond ghouls, they kind of knew that this was going to crap out here. I don't know. Bonds have gone to new highs again here this morning. So there's certainly no reason to touch this trade. And everybody was watching the daily brief yesterday. We had a really fun sort of walkthrough of a trader's life. I'm so smart. I'm so stupid. Now it looks like I'm smart again. Want to buy my newsletter? If we roll back over, don't demand a refund. No guarantees from the management. It's a trader's life. So, looks like the bonds are pointing back up here again. We'll see what happens. And of course, like we said, if the stocks roll over in earnest, this thing's probably going to take off. Gold, on the other hand, a really interesting conundrum. We've been talking recently with you guys about how, off the higher time frames, there's some really powerfully bullish forces, here. Big inverted head and shoulders, suggesting when all of this is said and done, probably going to head all the way up here to the 1950 area, but in the short term, were we going to maybe potentially fractal out here? Now, what's worse about this particular chart is you notice that they actually did this fractal with a gap. We know the gaps like to be filled in, and it was interesting this morning. You can see we opened up earlier today up here, and we started to climb the wall of worry, and we rallied up right into the gap, and then the market went F you and dumped. So I hate to say it, folks, but I think that fractal did confirm here. Boo, hiss, hiss, boo. Interesting thing is we actually should have seen a candle body actually come up and fill that hole. So it does mean, and ironically enough, it's probably just like this, and maybe this. It does mean that at some point down the road, we are going to be back up top here to fill in that gap. So, if you happen to have FOMO bought up top here and you're kind of like, oh, crap, well, I would like to try and get out of this position, that's probably your level you want to keep an eye on there, about 1761. Over the short term, as this chart sort of illustrates, 50% is down 1622. So pretty tough to be a gold bug right here, right now. Having said that, the position traders, they're still long and they're not really even thinking about doing anything. So as I had said, we had a report from Julian. He was trading a way through here. He did ride this rally. Things started to fall apart. And he's like, guys, I got alerts going off. I got to go do stuff. So sure hope Julian followed his plan. Take appropriate risks, live to fight another day. It's just the way a trader's life is. So with that said, back to sort of mixed messages here out of the risk offers. Like I said, the bonds are still working their way up. Maybe with the gold failing here, maybe the bonds come up against these highs and run into a brick wall of resistance. Tough to say. We always say, you can have an opinion, that's great, but usually your opinions are wrong. So I'll say my opinion is gold's going to crap out, which means gold's probably going to turn back up. I'll say my opinion is there's no way the bonds can continue this rally. So that means bonds probably going to rally. Having said that, you've seen these setups, and it's just a trader's life. Just keep taking your setups. And ideally, of course, the whole game here is that when you're right, you want to get paid relative to when you're wrong. So, if you're right, try and make at least a couple bucks. And if you're wrong, lose a buck. And in that situation, even if you're right only 50% of the time, you're still a scratch trader. Sometimes, like we'll get to earlier or later on here in the broadcast, you get paid, and also here yesterday on this UAVS, you can get paid quite substantially more relative to you being wrong in the market. You just have to be patient and disciplined and wait for the payday. That's the hard part of this game. Not going to say it's easy. Just moving this presentation along here. Thinking about stock market, thinking about risk, it's interesting to see how, 1, 2, 3 days ago we had that inside bar failure there saying, be careful, risk off. It seems to be, catching a bid. People are not buying junior penny stocks, and that ratio and relationship continues to work to the bear side. We're at this key level where I said the other day, if we're lucky, we can hold the low, hold the low, hold the low, maybe create like an inverted head and shoulders and start working our way up. So this is, it's test time now for this bad boy. And the worst part about this is actually if we change this to a line chart, you notice that, we could just get rid of it altogether, I suppose. But if we change this to a line chart, I guess I have to do it over here. You see that actually this could actually produce a new M here. Oh boy, that's horrible. So I'm very leery about buying too much new stock here, folks. Be ready for it. Let's hope we can hold these lows, turn back up, and start Wing out. But it doesn't look like it's happening today. Heading on over to the corn in particular, and interestingly enough, the corn and crypto actually looks to me very, very attractive in this environment. I thought it was kind of cool. Somebody yesterday in the video said, "Damn, Brian, your commentary about a nice fuck you and then a face rip move up, that was pretty damn spot on." So, thank you for that shout out. And that was just nothing more than the resolution of what the hell was that damn study? I always do this. Where the hell's the chart? It's not that one. It's not that one. I thought it was this one. Where did I put it? Was it this one? Maybe it was this one. Oh, yeah, there it is. So we drew up a fractal off of what I thought. It just seemed to me that this high here was sort of a pivot. The market symmetry study didn't follow it exactly, but, not bad guide. We never got that final pop there. But what I did find interesting, and I talked, at length with the community about this, was quite often you can draw these triangles, and usually about 2/3 the apex, they want to resolve themselves. So, if we just draw the trend line, and then, I'm just eyeballing this here for you, basically against these lows. I thought that was fascinating. So, wow. All you can say is wow. Or damn. I think that's the tweet I put out, was just like, okay, that's borderline ridiculous. So, and, the purpose of these videos is for you guys to learn. We get about 200-300 people that watch these every day. Maybe you've never seen this actually spelled out in such a beautiful example. I gotta say, you could probably find this in a textbook somewhere. Just a really good example of what triangle resolutions look like. Quite often there's the little fuck you, and then woohoo, we head the other direction. There is no trade setup for me per se off of this, especially if I'm looking for fuck yous. But what this does set up, and I thought this was kind of cool, is maybe we're going to get a trend continuation trade setup out of this. And notice, a lot of these trades, they don't set up by accident. Notice how on the big spike, boom, the market starts to consolidate, and look how it's respecting this 25 level. So now you can start drawing trend lines, and we have a nice little setup. We like to call it the Leanne James, LJ setup on the site, where really what we want to see is a trend line that's been, tagged a few times. You can see 1, 2, 3 here. Let's get a nice little W on the other side of this trend line. And, wouldn't it be awesome if that just set up so nicely right off that 25 level? And, I don't know whether we're going to get more lows to work with here, but you can see we got 1 kilo, we got another kilo, another kilo. So we've got a bunch of na people to try and defend our trade. So basically I was suggesting on the site today, and keep in mind, I know it sounds crazy, but I still think we are on... which one is it? This timeline. So I took the last halvening cycle, 2016. I sort of took the bull rally into that halvening event, and then what happened, and the halvening event was about here, and then what happens following the halvening event. Our studies sort of suggest that about somewhere around 20 to 25 days before the actual halvening is when we should see our peak of the sort of pre-halvening rally. And what's kind of interesting is we had this little consolidation here. right in here. And that's where I sort of started the study. And we got a nice little dip against the lows and then this big violent reversal. Now, I mean, I don't know what's going to happen. Nobody really knows for certain anything in this world. But I got to tell you, I really, especially with this big reversal, if the stock market can hold in here, start moving to highs. If I mean, I don't know how crude is related to this. Maybe crude craps out. Who knows? But I really do like this action. And believe it or not, seeing this kind of move here into the next 2-week window, if this reversal is seriously for real, I think that makes sense. It's not unrealistic in my eyes. So, in essence, the market is setting up a continuation here, and if that lower time frame bot does fire and take us up here, obviously the key level I'm going to be watching over here on Stamp is this 7,500 area. And interestingly enough, that and I don't know what the actually that's another thing I should mention here is this interesting. So this objective here takes us up to 7,600, where in essence we're just going to go up and nice and brush through all those old highs. So we'll see. This is a tough slog, right? There's a reload zone, there's previous market structure. Ironically enough, if this is a bull, this is where the bull actually has to step up and start doing some buying. So we'll see what happens here, but it's just interesting how we're consolidating nicely and setting up a nice little bot continuation trade to take us up top there. So keep your eyes peeled, folks. And of course, as we always say, no guarantees from the management. Here's a great example, as I had said earlier. If we're wrong on this thesis, then we lose $1. However, if we're right on this thesis, we make $3. And that's the key to being a profitable long-term trader. Try and lose the need that this setup has to work. That's not a game you're going to win over the long term. Get into the game where if this setup does work, I get paid substantially more than if the setup does not work. That's the key to making money at this game. Have I said that once or twice? I sure hope so. And I sure hope you heard me. So anyway, that's my sort of thinking on the corn right at the moment. There was one other thing I wanted to mention. What was it? You can see Mountain Man, Collins Buddies, 3 drives pattern. I still like a move up top. RSI studies, we had our first M up top here. If you follow that 3 M's kind of thinking, first M says stop, bull, you're on pause, which I think that's good. And actually, I didn't really like this price action yesterday. Not really a very well-defined M, right? And if anything, what I noticed was the low that we made now off of those lows. Notice that head and shoulders we talked about. So really what this says to me is that, really simply put, guys, we get a close below these levels. That's going to confirm a second M, which is a yellow M on our RSI. And that, of course, is going to be through the 50 line, second M's through 50 lines that are yellow. That's a pretty powerful signal. So if we do fail through here, get ready. There could be some pretty big, violent price action here. So just be aware of that, everybody. That's kind of like that S&P 500. Same thing. If the S&P 500 goes and M's out here, or, head and shoulders out here, we're probably heading down in earnest right across the board on all risk assets. So, there you are. Merry Christmas. One thing I will notice, and I thought this was incredible, I do like to watch these fun little, chaos levels and time zones. I don't know whether I've even drawn these correctly. Nobody teaches this stuff, so how the hell are you supposed to know if you're doing it right or wrong? I'm just sort of experimenting away. Last consolidation I had on ETH, which produced one of these chaos levels, I thought this was interesting. Wouldn't it be so funny if Ethereum just went absolutely ape shit here into the end of today and hit that? I would bark. It would be so funny. Obviously, we're nowhere near any kind of levels on Bitcoin. It just couldn't get going, but I don't know. Maybe this thing isn't done. Who knows? But what I thought was so cool, and this is just total aside, do with it as you please. Man, there's some good looking little altcoins out there right now, eh? Jesus. ETHUSD. Watch this. This is so funny. Look how this is also got a nutso insano upside objective. Maybe I didn't do this one correctly. 4 hour. Seem to remember. Interesting how that's just about on that, but that was weird. Oh no, this is versus USD. What am I doing? Jesus H Christ. And I've been talking forever here today, haven't I, Kevin? Sorry. Way too much. Way too much. But oh well. Okay, it's not that one. I had this chart. It was so cool. When I saw the level today, I was just like, you can't be serious. Anyway, let's see if I can find it. Here it is. So I don't know whether, it's Bitcoin or Ethereum or what, but I just thought this was really cool, where we have basically a chaos level off of this consolidation. And this was the 4.669 time window off of that consolidation. Again, I don't know if I've drawn this correctly or not, but I just thought that was fascinating. It must have been off the daily. Yeah, there it was. So just basically that high, back to that low, chaos level. And look how close we came to this today. That's ridiculous. So 0.0247, and that number was 0.0428. So, it is what it is. If this is usable, great. If not, no big deal. As I said, on the individual studies, didn't seem to work. So, I know one guy was like, "You're calling for 11,000 on Bitcoin? What are you, crazy? You're just a crook." I mean, I'm not saying that the market's going to go this. I'm a student of the market just watching this stuff with you guys. And I got to say, I was pretty impressed with that level there today. So go figure. Anyway, to that end, did notice that Ethereum's doing very, very well here this morning. So it wasn't necessarily like it was just Bitcoin. Look at Ethereum right back up at its old highs. And Litecoin's trying to buck up and come back alive. Full disclosure, and I got to respect Julian for it. Thought it was a pretty good idea. On this counter trend rally, right back up against the highs, he went and strapped on some hedges and just said, look, I'm just going to risk this window right here on Bitcoin. And if it goes up through the top, so what? We're hedged from here. I'll take the hedge off if we break to new highs. What is that? It's like $300-$400 hedge. That's actually pretty smart. But I don't know about Ethereum. Do you think it looks to me like Ethereum wants to press to new highs? Ooh, W's in OBV. Sexalicious. We'll see how it goes. As I've said repeatedly, I still think Bitcoin rallies into that pre-halving window and Colin's buddies and Mountain Mans and all that kind of stuff. But I thought I'd just tell you, full disclosure, Julian actually went and put on a big old hedge here on this rally here this morning. So, interesting. Let's see what happens. And like I said just a moment ago, actually, I don't mind that idea. If, we break to these highs, maybe take the hedges off. So, I'll just finish off today with a big shout out to my co-host, who you don't really hear talk too much on this show. But, a damn fine person unto himself. Like, I'm so proud to, even be able to call these people my friends. Although I don't know whether I can say that. He might get angry if I actually said that publicly. What do you think, Kevin? Can we be friends? Friends. Hey, there we go. At least we got something out of him. Yay, woo! All right, so I'm not a total idiot. But, son of a bitch, I even told you guys yesterday, Markinator's going, I'd pay attention to that KMD, and boom, Merry Christmas. As we say in the capital markets, there's always a bull somewhere. So, congratulations, KMD fans. You want to hear a kick in the pants? I own so many of these coins, it's ridiculous. But I thought it was kind of funny. This one, And isn't that interesting? They don't even have the data going back. The last trade I did on this was I sold. I had a net, like, sell. I was like a fifth or sixth double or whatever. But back in 2017, the last transaction, I'll even show you it here if I have it on my screen, although I don't like showing account numbers and shit like that. Yeah, forget that. Don't worry. Anyway, last transaction I had on this thing, I sold at 80,000 sats. So it just goes to show at 9,000 sats, I mean, we're about what 10% back to the top, and it just goes to show there's a ton of room for these things to go back up. But I was very, very pleased and proud to hear in the community people were buying these W's down in here. And, this isn't rocket science, people. It's the same message, rinse and repeat, day in, day out. And, of course, this one you can see, yoo-hoo! They're all banging out doubles, triples, quadruples, whatever. I guess pretty much doubles here. I did hear a lot of people talking about banging out doubles. So I'm not quite sure how they did that. Maybe it was off of... I don't know what other exchange this is on, but like if it's on, this is the Trex coin. If it's on Binance or something, it might have gone a bit higher. But as you can see, and big shout out to Kevin. I even said this to you yesterday. Oh, Kevin says this KMD is looking good. Sure enough, and here's a situation where if Kevin's saying, hey, KMD is looking good, and you're like, hey, I think I got some of that on the books. Just make damn sure to have your open orders to sell halves on doubles, thirds on triples, whatever your plan says. Because bing, 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 that cash register is being rung today. And you want a good example, keep in mind, these things are up and down like a horse drawers, right? So, I showed you one yesterday that went ape shit. And, of course, don't chase, don't chase, don't chase. And you can see it's coming screaming back down. And remember I said if I was going to buy, I want to work my order at the bid. Or at the gap here. And, would it have been a good idea to have your open orders working so you just get filled on this nutso rally? Well, looking back in hindsight, that was a smart idea. So be prepared, not only in the stock market, but also in crypto. Just make damn sure to have those open orders to sell at appropriate levels working. All right, the only other thing I wanted to mention here today, I've been telling you guys about this a bit lately, so I don't know. I mean, it's certainly not a new tout, but I got to tell you, man, this BitTube just looks damn sick in here. I did buy, I think, like last spring or something, down in this 120 area. Oh, this is versus USD, so it won't show the same price versus corn. So I'm actually thinking about going and picking up a bit more. So for whatever it's worth, I've got a bid working at the gap here. This looks like a Joby gap, so I wouldn't be surprised if this thing actually rallies a bit more. And, of course, if it goes absolutely apeshit, I'll sell up top, and I've missed the opportunity to add. But, wow, what a good-looking chart there. So I've made reference to that a few times here recently. Caveat emptor. Certainly not telling you what to do. Do with your money as you please. But that definitely has my attention down there. So, okay, I think we'll leave the rant at that for today. Hope you guys got some good value out of it. All the best, and bye for now.